What's up, you guys? It's Graham here. So we've seen it again. Stocks have just hit all-time highs, but the real question remains, how high can this go? And also, should we just sell it all? I feel like so many people are sitting on the edge of their seat watching this all unfold, seeing stocks hit all-time highs and thinking to themselves, wait a second, why the hell would I ever invest in the stock market when we're at an all-time high? Isn't the way to do this whole investing thing buy low, sell high instead? So we'll shed some light on this because I really feel that this will help put it in perspective. So to start this video, let me give you a quick disclosure that no one out there can accurately predict the market. It could very well go up for another several years. It could go down next week. It could go down right after I post this video, or it could go up. The thing is, no one can accurately and consistently predict what the market will be doing. Now, the people who do claim they know what the market is going to be doing are much like a broken clock, in that a broken clock is right twice a day. But what happens though is that it's very easy for people to talk about the stock markets just collapsing any day now or any month now. But what ends up happening when these heavy hitters are wrong about their predictions is that nothing happens, people ignore them, and people simply just move on. But what happens here is that these same people keep making predictions, and eventually, guess what? One of those predictions is going to come true. And then all of a sudden, they're gonna look at that and they're gonna say, you know what, I told you guys, the stock market was about to crash, and it did. Look at this, I called it, I said it, it was about to crash, and it did. And then everyone praises that person and then seems to ignore all of the dozens of times that they've been wrong. Now, with that said, here is some perspective in regards to the stock market. In May of 2013, stocks hit all-time highs. And when they did, panic ensued. People were saying, this is a bubble. It's about to crash any day now. Best to probably keep a lot of cash. Best to probably buy gold and silver. At that time, the S&P 500 was $1,630. Then we hit April 1st, 2014. Stocks again hit all-time highs. And again, people panicked and they said, prepare for a mass sell-off. Stocks just hit all-time highs. We're about to see a big crash here. Probably best just to sell it off. And at the time, the S&P 500 was $1,860. Then we hit April 23rd, 2015. Stocks hit all-time highs. And again, panic ensued and people were claiming, get ready for a bumpy ride. Stocks are, how much higher can this go? Get ready, you guys, just brace for the worst. And at the time, the S&P 500 was trading for $2,080. Then we have August 8th, 2016. Stocks hit all-time highs despite warnings. Uh-oh, warnings about the stock market being overvalued. It's probably best maybe just to cash out now and sell, because right now we've hit an all-time high. This is probably going to be as good as it gets, you guys, because the S&P at this point is $2,180. But then we hit August 1st, 2017, stocks again, guess what? You probably know it by now, hit all-time highs. You know what? This is as good as it gets. I mean, this if we're not in a bubble now, we're for sure in a bubble. News like this sells, so let's just say the stock market is about to crash any moment now. It's hit new peak bubble levels, and this is it. And at this point, the S&P 500 is trading for $2,400. And now, August 29th, 2018, stocks hit record highs, and the S&P 500 is trading over $2,900. So anyway, here's what I'm getting at here is that over time, the stock market is always consistently at some point or another going to be hitting all-time highs. Let's even go all the way back to February 1985 when the S&P 500 was trading at its all-time high of $179. Did this mean it was a bad time to invest simply because it was at an all-time high? Well, if we look just 2 years forward to February 1st, 1987, the S&P 500 was trading for $274. That, you guys, is a 55% increase above the previous all-time high 2 years prior. But let's just assume for a second that you decided to go YOLO and invest all of your money February 1988 for $274. Well, guess what? 1 year later, it was worth less. So does that mean you got a bad deal and this is proof that you should not be investing at all-time highs? And the answer to this is no, because if you simply didn't sell and you held on to it, just 1 year later you would have all of your money back plus dividends. And we could all do the math here that if you bought in at $274 in 1988, it's worth considerably more today, where the S&P 500 is trading for over $2,900. But here's the point I'm really getting at, is that over time, stocks will always be consistently hitting all-time highs. They have in the 50s, the 60s, the 70s, the 80s, all the way to today, they've been hitting all-time highs. And as markets just naturally increase over time, this is just something that we're going to have to get used to, thankfully. But the real reality is, can we consistently predict whether the market will be going up? And the answer is no. Can we predict when the market is going to be going down? The answer is no. Could there be a price decrease over the next year? Very much so. Could the price go down for the next 3 or 4 years? And the answer is it could. Could prices go up for the next few years? The answer is maybe it could. Could the prices just stay the same? I don't know. Maybe. Given this, we can only really base our investing strategy off of what we know, which tends to be long-term historical trends. Now, the safest and most profitable investing strategy out there is simply just this: save your money. Buy when you can. Buy consistently. Don't worry whether you're buying low and selling high. Simply just buy and never sell. And that's it. It's as simple as that. Now, will there be years that the market goes down in price? 100% yes. Will there be years that markets go up in price? The answer is 100% yes. And the long-term trend over like 20 or 30 years should overall be fairly positive. And the reality is that panic or alarmist news articles and clickbait titles just like my video get views. They attract more attention, and people are more likely to watch fear, or more likely to engage in it than they are just like, well, the stock market is doing fairly well. You know, it's all pretty optimistic. That doesn't get attention. That doesn't get ad space. That doesn't get views or clicks. What gets clicks is the stock market's about to crash. Here's what you need to know right now. Now, of course, be vigilant of global trends and be aware of what the economy is doing, especially local economies. But at the same time, don't necessarily dictate a fear of what could happen to impact any of your investment strategies. The best investment strategy, again, out there is simply buy and hold long term. And one last note before I finish up this video is that it's very true what they say, that time in the market beats timing the market. Now consider this. If you've invested in the S&P 500 over the last 10 years, your return would be approximately 7.2% annually. If you missed out on just the top 5 trading days over the last 10 years, your return would drop to just over 5%. Then if you missed the best 10 days of trading over the last 10 years, your return would only be 3.5%. If you ended up missing the top 20 days over the last 10 years, your return would only be 1.15%. And if you missed the top 40 days of trading over the last 10 years, your return would actually be negative 2.8%. Remember, this is over 10 years. We're talking about just missing a few of the best days over 10 years. That's how impactful it is that time in the market is almost always better than timing the market. And lastly, I saw this online and I thought this was hilarious and a perfect example for this video. Since 2012, these were all the big shot economists that were predicting the market crash. Let me read some of these to you. So we got July 31st, 2012, Paul Farrell says, "The real crash is dead ahead." Mark Faber says, November 13th, 2012, "Prepare for a massive meltdown." Mark Faber then says, August 8th, 2013, "Stocks to end the year 20% lower." Paul B. Farrell again says, February 24th, 2014, "Crash of 2014, it's like 1929, you'll never see it coming." Even Ron Paul was saying, "Stocks are in a bubble and will crash." Carl Icahn, September 30th, 2015, "Danger ahead." Paul B. Farrell again, March 1st, 2015, "The crash of 2016 really is coming." Then just a few months later, he says the same thing, 100% risk of a 50% crash if Trump wins nomination. Guys, that's 100% risk. That means it's certain the market is going to crash. Still waiting. And then Mark Faber again, October 17th, 2017, a major stock market correction is coming. And my favorite one here is right now, it's basically, I think he just gave up at this point. I mean, it's just like, I've been wrong for such a long time. So let me just say this. Mark Faber, September 20th, 2017. Something will happen. But you know what? The reality of this is that one day they're going to be right. They're going to claim that they predicted this, that they were right, that everyone should listen to them. They're going to get lucrative book deals and all of these, they're going to get money from this. But the reality is that, again, a broken clock is always right twice a day. Now, again, full disclosure, I'm not saying here that the markets will always be going up. Like I said, a year from now, we can look at this video, the markets could be down 15%, and you can go and look at me and you can say, but Graham, you were wrong about it. You were wrong. Again, I'm not predicting the markets consistently always going up. I'm not telling you guys the market is going to be 7 or 10% higher next year. I'm not telling you it's going to go down next year. All I'm saying is this, is that long term, the trend always tends to be upwards. We're talking about 20 or 30 years. The short term is unpredictable. Could it be higher next year? Yes. Could it be lower next year? Yes. I have no prediction in this whatsoever. My only prediction is this, is that 30 years from now, 20 or 30 years from now, we'll see a price higher than where we are now. And that given the long-term historic trends over the last 100 years of the S&P 500, I think it's fairly safe to assume that long-term, 30 years from now, on average, we can see somewhere around a 7% return, maybe 8%, could be 6%, somewhere around there long-term. Doesn't mean it's going to be that every single year. There will be years it goes down 20% and years it goes up 20%. The long term always tends to go up, and that's the whole point of this video. All-time highs don't really matter. The peaks, we're always going to be hitting peaks. Just invest long term, save what you can, invest what you can stash away for a long term. That's it. So as always, you guys, thank you so much for watching. I really appreciate it. Again, if you enjoy videos like this, make sure to click the like button. And also, if you've watched it all the way through, you haven't already subscribed yet, make sure to smash that subscribe button. I post 3 videos a week, so if you want to be a part of it there, feel free to add me there. And also, feel free to comment down below if you agree what I have to say, if you disagree with it. Let me know your thoughts. I read every single comment. So whatever you comment, 100%, that's 100%, that I read everything. So I listen to all of you guys, whatever you have to say, I do my best to respond as much as I can. So if you want to comment anything down below, let me know. Also, feel free to add me on Snapchat and Instagram. I post there pretty much daily, so if you want to be a part of it there, feel free to be a part of it there. Thank you again for watching, and until next time.